It's November 17th, and we are finishing the third week of a stock market rally. The stock market is doing really well. The S&P is up about 10%. The NASDAQ is up even higher. So really nice to see 3 consecutive weeks of stocks going up. The one highlight I wanted to make in this video is that small cap stocks are up even higher than the S&P over the past week. The Russell 2000 today outperformed the S&P significantly. The Russell 2000 was up 1.28%, which was much higher than the flat S&P at 0.06%. And the Russell 2000 is made up of small cap stocks. These are 2,000 small cap stocks that are traded in the stock market. And over really the course of 4 or 5 trading days, it is up big time. It has just gone, really straight up and really caught up with the S&P if you measure the last month of trading. So it's interesting to see small caps really take off. To me, it makes sense because the story on the S&P in 2023 is that these large companies, the Magnificent Seven, Apple, Microsoft, Tesla, they've been a big part of the gain you've seen in the S&P. But these small stocks haven't been rallying all that often in 2023. So it may be their time to really start taking off. There's probably a lot of unappreciated, undervalued small stocks out there that could really take off and start rewarding investors. Over the last 5 trading days, the Russell 2000 is up 6%, while the S&P is up only 2.5%. It goes to show that investors are interested in these smaller cap stocks. There's probably a lot of good buys in the smaller companies that are not overly analyzed and are tracked only by a few analysts. So a good place to go bargain hunting is in these small stocks. I wanted to highlight 3 stocks that I own that have been really rallying. The first one is Catalyst Pharmaceuticals, and this is a smaller pharmaceutical company, profitable, growing, and they were up 3.2% today. And over the last 3 weeks, they're up 15%. Really nice rally in Catalyst. Enphase Energy was up 2.4% today. And over the last 8 days, it's up 22%. Nice to see Enphase rally. It's been a beaten down stock, but it's beginning to take off. Banks are coming back. They were not desirable earlier in the year, but Midland States Bank is a good example of a nice value stock. It was up almost 2% today. And over the last 3 weeks, it's up 17%, and it pays more than a 5% dividend. Let's talk about interest rates now. So the 10-year was flat today. For the month, it's down 45 basis points. Good to see, because this is going to help people that want a mortgage. For the year, it's up 62 basis points. So it's still higher year over year. Short-term rates are in the same boat. They're up 39 basis points and they're down 31 basis points. So interest rates in the month are down, but for the year, they have been going up. But it's good to see that interest rates are falling down. It helps in valuations of stocks. It also helps the consumer and the home shopper. So to me, it's good news to see interest rates drop. It's good to see that we're ending the week with not a lot of fireworks in the interest rate market. Hopefully it stays there next week. Now, I follow the VIX, the volatility index, week to week to tell me where's the market at. Is there a lot of fear? The higher the VIX, the more there is fear. The lower the VIX, the more comfortable investors are. And there's no coincidence that when the VIX is down, the stock market rallies. You can see these rallies here. It's when the VIX is going down. As the VIX goes down, the stock market's going up. So to have the VIX stay nice and flat at a very low range is very good news. It favors investors wanting to buy stocks, and it favors stocks continuing to go up. So we had a good week for the VIX, and I'm hoping that the VIX stays at a nice low flat level next week. What kind of news is coming next week that could affect the market significantly? The biggest bit of news that I see coming up is jobless claims. It's expected to be announced at 6:30 a.m. on Wednesday of next week. And that's 6:30 a.m. Pacific. So that'd be 9:30 Eastern. We're expecting 220 jobless claims. And basically, if the number came in and we had fewer jobless claims than we expected, that's good news for the economy, but it's actually bad news for stocks. That would mean that everybody has a job. The Federal Reserve may be nervous that, hey, if everybody has a job, wages are going to keep going up, people are going to keep buying stuff, and it's going to put upward pressure on inflation. So they may want to keep rates high for longer, or maybe even have one rate hike if we see really good job growth. So we'll see where it comes in. If it comes in flat, I think it'll be a non-event. Now, on the flip side, if we see that, hey, a lot of people are losing their jobs and the jobless claims have gone up, then that's actually good news for stocks. And the reason for that is, as jobless claims go up, the Federal Reserve has two mandates: to keep inflation low and to strive for full employment. So if they have a lot of people that are out of work, they're going to start thinking about lowering interest rates to stimulate the economy. So that'll be, I think, the most important economic news of the week that's going to affect stocks. Everything else could affect stocks, but not as dramatically as that jobless report. I'd love to see this rally in stocks continue on for a fourth week. I'd love to sit down with my family on Thanksgiving Day, watch a little football, eat a little turkey, and count some more gains. Over the last 3 weeks, it's been a really nice run, 10% across the board raise in stock prices. I've seen a lot of my stocks go up in the green. It's fun to watch them. It's fun to see, especially some smaller names, really just take off in value. So I'm hoping that that's the case, that, I sit down to Thanksgiving and it's green across the board for 3 trading days. And we will book another up week for the 4th week in a row. And the bulls will keep running and making money in this rally.